Jim, did you notice, were you on the Parkway today? And did you pass a service center, one of the gas station here? Did you see the price of gas?
No, I didn't pass the gas station, but I mean, I heard it's like at 401 now. What'd you see it at?
On the Parkway, it was 409.
Oof.
I was blown away. I think it was Thursday morning. I drove by the Wawa by me in Barnegat, and it was $3.99.9. It was $3.73 the day before. It went up 27 cents overnight. I don't think I've ever seen that before.
It's only going up too.
Yeah, and on the Parkway it was $3.73. The next morning it was $4.09. I mean, that shows you how rapidly energy prices are rising, not only here but across the world. A lot of it has to do with Ukraine. But what a week in the energy markets, and we've seen movements that we haven't, like I said, haven't seen in decades on energy. Oil closed the week at $115 a barrel. It hasn't been there in 10, 12 years. The high, I think, on oil was $150 back 2008 or something like that. But here we are at 115, and it looks like there's no top here. Oil continues to go higher, which means gasoline prices, heating oil, and everything else is going up as well. And energy is the main driver of inflation because energy goes into everything. Everything. You go into a store and you see a product. Well, it took energy to extract the minerals out of the ground, the raw materials that went into that product. It took energy to manufacture that product. It took energy to deliver that product to the store. So when you have rising energy prices, it flows through to the final cost of goods and services for everything. So Americans now are really starting to feel the pinch. I mean, filling up your car today, I mean, just in one day, I mean, think of the difference. In one day, on a 20-gallon fill-up, you go to a Wawa where it went up from $4.73 to $4. It's $6 more for a tank of gas. Overnight. Worse on the Parkway. On the Parkway, it's $7.20 more overnight to fill your gas tank. Quite spectacular. And really concerning. And now in California, gasoline prices are already over $5. And going higher. And this is now starting to be scary. This hits people right in the face because you're driving down the road, you pass gas stations, and you see the price, and you look at your gas gauge and wonder how long it's going to be before you have to fill up. But you know what? You go down to a half a tank, you should fill up right away because chances are it's going to be more expensive in the days ahead. It's really, really a big story. And it's certainly going to be negative for the economy. Rising energy prices is negative for the economy. It's negative for consumer spending, and so many things. And now it's really, really, really starting to hit people in the pocketbook, especially people who are on fixed income, lower income people, even middle income people who are struggling to pay their bills, who are paycheck to paycheck. This is really starting to be concerning. Now, thankfully, for those who heat their house with heating oil, it's March. We're getting close to spring. We'll use less and less of that. Thankfully, this is not the beginning of the winter. My previous house that I owned was an oil-heated house, and I remember during high oil prices how expensive it was to fill the tank and heat the house over the winter. It was like $6,000 one winter for me. I couldn't imagine what's going on right now with people who use heating oil on their house. So inflation, it is the big story. And it was happening before Ukraine. Now, of course, the Democrats and President Biden and Peppermint Patty, they all want to blame Ukraine now on inflation. Like, it just started. The Ukrainian war is not even 2 weeks old yet. So don't tell me that it's Ukraine the reason why we have inflation. Now, yeah, it's exacerbating it. But that's not the reason why we have it. Let's take a look at some commodities. Wheat. Now, the big problem with wheat is Russia and Ukraine are the breadbasket of Europe when it comes to growing wheat. They're like 25% of the world's production. And with the problems in Ukraine, wheat prices have soared. Let's look at the price of wheat. January 1st, we're talking 2 months. The price of wheat was $800. Now, I don't know if that's $8 a bushel or how it's priced, but just you'll get the relative term. $800 January 1st. Today, it's $1,348 for the same amount of wheat. That's a 68% increase. Now, we're talking food here. We were just talking energy. We're talking gasoline. Now let's talk food. Wheat goes into everything, doesn't it? 68% increase. Corn was $575. I guess that's a bushel, $575. January 1st. Today it's $756. A 31.5% increase. Soybeans. $12.50. Now $16.76, up 34%. And then you look at gasoline. Wholesale, $2.18 January 1st, $3.54 today, 63% increase in 2 months. And gasoline was up 8% on Friday alone in the futures market. So we have energy inflation, we have food inflation, and that's especially problematic for third world countries. And the reason why it's so bad for third world countries is that they spend a very, very high percentage of their income on food. So when you have food inflation, it's extremely problematic. It causes hunger. And it causes social unrest. If you remember the Arab Spring 10 years ago, that happened because food prices were going up. Look, people will take a lot of stuff and go about their daily life. When they can't feed their family, now you got a problem. And there's big concern that you're going to have social unrest if this doesn't right itself very quickly. So it's starting to get scary, the inflationary problem that we're seeing. And when you see gasoline go up 30 cents a gallon overnight, that's pretty scary. Now, some market analysts are saying that as things are going in Ukraine, we could be seeing $150 to $200 a barrel oil, which you think $4 gas is expensive. You're talking $5.50. And that's really going to make a difference in the economy, because if you take money away from consumers because they're putting money in their gas tank, that's less money they have to go and spend in Target. So markets are really riled up between geopolitical instability and inflation. Now, we'll talk more about the State of the Union address in the second hour of the show, which was a lot of remarkable stuff in that. But one thing in the State of the Union, now there's a lot of things Biden didn't even touch on the State of the Union, and we'll talk about that later. But when he's talking about inflation, here's a person who has no clue. All right, this is a person, or whoever wrote this speech, the people in his sphere, who are not normal people. They don't live like you and I do. Political animals in Washington are so insulated from the daily grind of life. Many of them never drive a car. They're driven everywhere. They never fill up a tank. Government pays for everything, and they're so out of touch to the average American. So Biden, decided that he's going to tell corporate America exactly how to deal with the inflation problem, and this is what he had to say.
I think I have a better idea to fight inflation. Lower your costs, not your wages. Cut the cost of prescription drugs. I may be wrong.
All right, so cut your cost. Is this the most asinine thing you've ever heard? A company buys raw materials. How do you cut your costs when the cost of everything that goes into your product is going up? Just cut your costs, not your wages. Well, companies aren't cutting wages. They're increasing wages because we have wage inflation. Employees are demanding more wages. I can't afford to work for you anymore. I'm going to go find another job. Okay, I'll give you a raise. Which only exacerbates inflation. So Joey has the key to solving the inflation problem. Just corporations need to lower their costs, not their wages. Okay. I don't think that's going to happen. How about the federal government stop spending money we don't have? How about the Federal Reserve start printing money out of thin air? That'll work. So the markets worldwide are still volatile. Every headline that comes out of Ukraine and Russia affects the markets. For the week, the Dow Jones Industrial Average was down 1.3%. And I've said this every week. The market's always within a 1% move up or down each week. But if you live the market like I do and other financial professionals that have this computer screen on all day long and watch markets trade, that doesn't tell the whole story. The markets are incredibly volatile. Down 800 points in the morning, and it closes up 100 points in the afternoon. There's all kinds of shenanigans going on in the market. Year to date, the Dow Jones Industrial Average is down 7.5%, which is a significant loss for the Dow in such a short amount of time, 2 months. For the week, the S&P 500 down 1.27, down 9.18 for the year. NASDAQ eked out a gain up almost 0.5%, but still down 13.5% for the year. And let me tell you something. When you say NASDAQ, you're talking about an index. Those indexes are very heavily laden with the Facebooks of the world and the Microsoft and Apple and so forth. So these big cap stocks really mask the carnage that's going on in the market. If you look at general stocks, I believe 60% of NASDAQ stocks are down more than 50% off their highs last year. I mean, that's a major bear market. And a lot of people, they look at their statements, they have mutual funds, and they say, geez, Lou, you just said the market's only down 10% or so. Why am I down 20? Because these mutual funds have other stocks besides the Apples and Microsofts and Teslas and Facebooks. And they are getting massacred. Good companies, I'm looking at good companies that I own, down 50, 60%. It's just ridiculous. But, you look at the NASDAQ only down 13, and that's because of the big cap tech stocks that are keeping it alive. Now, if we go overseas and we look at markets there, it's a lot worse, especially in Europe. Obviously, Europe is much more vulnerable to what's going on in Ukraine. The German DAX for the week was down 10.11% for a week. That's a crash almost. For the year, the DAX is down 17.5%. You go over to Japan, not really affected by Ukraine, not part of Europe, but still we have a global economy. Everything affects everything around the world. The Nikkei was down almost 2% for the week, down almost 10% for the year. U.S. Treasury bond prices rose this week for the first time in a while, and yields fell. And that's because there was a flight to safety. And that's what happens. When people are selling off stocks and they're afraid of risk, they buy U.S. Treasury bonds because there's no risk there, or very little risk. And that pushes prices up, and when bond prices go up, yields drop. And the yield on the 10-year bond, which was 1.90 last Friday, a week ago, closed this Friday at 1.73. So that's a significant drop in interest rates in the bond market. Also, the Fed came out today, this week, Jerome Powell came out and indicated that when the Fed meets later this month, they're going to raise interest rates. Everybody knew that. Most people thought it was going to be 0.5%, the first increase. But because of the turmoil in the markets, Powell made it pretty clear that he's only going to raise it 0.25%. Whoopie-doo, 0.25%. We're going to go from 0 to 0.25% in the federal funds rate, which means nothing. It means zero. It will do zippo to fight inflation. He could have raised it to 1%, 1.5%. It still wouldn't do anything to fight inflation. Inflation is running for different reasons than interest rates. It has to do with money creation. It has to do with scarcity of product. And the Fed can't raise interest rates to the level that they have to raise it to make any difference. But you raise interest rates enough, it'll affect the markets, it'll affect the economy, it'll affect mortgage rates, it'll affect the housing market, and still do nothing for the general inflation rate. As I said, oil's closed on Friday at $115 a barrel for the week, up from $97.50, 18% increase in oil prices for the week. And that's why you saw gasoline prices go up so much. Bitcoin, it's having a tough year. Bitcoin is not a risk asset. It's not a place you go to protect yourself during market turmoil. That's been obvious this year. Bitcoin closed Friday, 39,477. Remember, it was 65,000. I've talked to a number of people who've lost their shirts in Bitcoin. They were late to the party. Year to date, Bitcoin is one of the worst performing assets, down 16.5% in 2 months. So all the people out there who were Bitcoin, part of the Bitcoin cult, good luck with that. But gold is doing what gold should be doing. Gold closed at $1,972 an ounce on Friday. January 1st, it was $1,829, so it's risen $143 in the last couple of months, and that is almost an 8% return. Now look at things. Financial assets have negative returns year to date. Stocks, bonds, cryptocurrencies. But where you make money nowadays is in commodities. That's where the money is being made. And gold is a commodity. Silver is a commodity. Silver started the year at $23.32 an ounce, closed Friday at $25.79 an ounce, up 10.6%. And I think it's just the beginning for the precious metals. Better than silver and gold, platinum. Platinum's up 17% year to date. Started the year at $969 an ounce. Today it's $11.32. But you really want to make money? Palladium. Palladium is a precious metal. Most people don't think of palladium as a precious metal, but it is. Palladium started the year at $1,901 an ounce. Closed Friday at $3,036 an ounce. Up $1,135 an ounce. 2 months, that's a 60% return. Huge. And palladium was up $221 on Friday, 8% in 1 month. So commodities are running, financial assets are tanking, as it should be, given the inflationary situation that we're in. Now, gold peaked at $2,069 an ounce a few years ago. So we're less than $100 an ounce away from the all-time high. Silver is nowhere near close to an all-time high. Silver's all-time high is like $50 an ounce. It's 25 right now. Silver is probably the most undervalued asset in the world right now. And so this is the time for people to consider precious metals in your life. This is why you buy precious metals. For this occasion. Political instability, geopolitical problems, financial problems, inflation, currency depreciation, which is all the things that are happening right now. So I'm going to get into gold, what it is, what it's not, how to buy it, gold and silver, different ways of buying it. But before I go there, I just want to talk about food commodities and energy commodities. There's a way of playing this using exchange-traded funds that trade on the New York Stock Exchange. I've been using them in my inflation portfolios for our clients. They've been doing fantastic. The ones that we like to use, there's two of them. DBA, which is the Invesco Agricultural Commodities Fund. It's made up of futures contracts, food related, soybeans, corn, wheat. We talk wheat was up 40-something%. Coffee, all these things, hogs, beef, you name it, food. And we all know, we go to the grocery store, we know what's going on with food. DBC is the symbol of the DBA is the symbol of the Invesco Agricultural Fund. It's up 11% year to date. DBC is a symbol for the energy-related commodities fund. These are the top 14 commodities that trade on the exchange. Very energy heavy, because the number one commodity that's traded is oil, then gasoline and natural gas. DBC is up 30% year to date. Boy, it's nice to have those commodity funds instead of the stock market, right? Let us down. And smart money has been buying them.